the power of the candlesticks. Okay? Don't ever forget risk-reward. We touched on that before. I know it was a little ahead of what we were me bringing it up now, but it's just so important. And these are the topics we're going to be talking about in detail in the next session here. The if-then system. Okay, stops, always use them. Candles in context. Intraday candlestick charts. Okay. Pace trades according to the market environment. Let go of emotions, psychology. I laugh there, right? That's if only I could be like Data or who's the Vulcan Spock. If only I could trade like Spock, right? That's a great title for a book. Trade like Spock. Indicators, the more the better. Okay. Never trade without an eye to news. A technical analyst is talking about news. You'll see why. Yeah. And examine how the market acts at support and resistance. Essentially, these tools will allow you to have discipline. And if you think it was easy coming up with that anagram. And what we're going to look at now is the disciplined approach. It's really a blueprint for what I call trading success. So we're going to go through the anagram discipline, the D, the I, the S. They won't be in order, though. Okay, so as you look at them, don't think they're going to be in spelling order. And the first one happens to be a D. We're going to do a D. Don't ever forget the risk-reward of a trade. Okay. One of the questions I was asked during the survey, on the Forex survey, is when should you ignore a candlestick signal? I mentioned this before. When it's a bad risk-reward. I don't think ignore is the right word. When should you not trade on the candlestick signal? Ignore it means you completely forget about it. But you saw with many of these candlestick signals, right? If you had like that evening star and it's a bad risk reward, don't ignore it. Just don't use it for the trade at that time. Make it as a resistance area. Okay. It's probably one of the most important things that you're going to do to improve your trading profitability by always looking at the risk reward. Okay, how many of you have done that when you looked at a candlestick signal, thinking about looking at what your stop level is and what your profit potential is? How many? See? How many will now? You all had better raise your hand, because that is really going to separate you from the competition, really and truly. And I think just knowing that will pay for this workshop many, many times over. If it's a bad risk reward, you don't do the trade. And I found this optical illusion here. This is pretty neat. Let's see if this works. Now you see them all moving around. Does that work on here? Yeah. See it all shifting around, all like psychedelic. But they're really not. Okay, I'm going to put this line here. Just focus on one of them. Just one of these little peanuts or whatever they are. You can see it doesn't move. It stops moving. The idea of this is know what to focus on. Always, always focus on the risk reward. Okay? And that's one of my trading principles. It's number 4 here, but probably as far as importance is concerned, it should be number 1. You always have to judge the risk reward of a potential trade. Okay, here we have a hammer confirming support. Now, I could tell you that this hammer is great. Look how nicely it worked out. Look how the market rallied after. But in the real world, when we're going to be trading, when you see that hammer, what about the risk reward? Is that a hammer that one should be buying on? No. Because the risk reward, that red line there is the area you think about buying because you need a close. That would be my resistance area. Once again, yours could be different, but this is what I'd be looking at as resistance. So your risk is in the blue vertical line. Your target is the blue vertical line, and your risk is the red hammer. The red arrow. The red arrow. Does that look like a good risk reward? It looks like you're risking 1-to-1. It looks like almost maybe 1-to-1. Okay. Same thing. Question? I probably wouldn't. The question is, where would I enter? Unfortunately, the market didn't pull back to the hammer. Where might I enter, though? Where I don't know if we're going to look at this one, but there's actually one where we got in the middle of the lower shadow of that hammer. By looking at an intraday chart, we got a buy signal. You didn't have to wait for the close of the hammer. We'll look at that when we talk about intraday. But what you could do is, we know it's a hammer. We have to wait for what? The close, right? It's not a candlestick signal until it's a close. What happens during the day if the market's pulling back and then starts moving up is you may say to yourself, what candlestick signal is that hammer confirming? It's the white. It doesn't quite wrap around the black. What is that? Piercing pattern. So we know we have a potential support area based on the piercing pattern. And although we don't know it's a hammer until the end of the day, if the market gets near that low of the piercing pattern intraday and then starts pulling up, you may be buying it then, okay, because it's confirming a support area. But if you're just looking only, if say you work during the day and you come back at the end of the day and you have the hammer, you wouldn't have done any trade because it didn't pull back to the hammer for us to buy it again. You missed. That's right. Yeah. Right. Yes, you can buy it with the resistance areas broken, and what I would do is classic Western technicals, when we're in a lateral trading range, a box range, the Japanese call it, is you take whichever way the market breaks out, you take the height of the range. So here it broke out to the upside, and this is 172.40, a little hard to see. Yeah, 176, so what, about 350 pips? Am I doing that right? So at 350 to 176, my target would be 179.50. Keep in mind, a target doesn't mean that is necessarily where it's going to stop. It's a minimum target. It could get above that. And also, if you're trading with price patterns, and we'll look at price patterns in a couple of minutes for targets, it doesn't mean you let the whole position ride until you get to your target. Nothing wrong with taking profits along the way. Okay, here we have a bullish engulfing pattern, also a hammer. And risk reward, I don't know, it might be 2 to 1. I have to look at the numbers, but it doesn't matter about the numbers here. The idea is I want you to get very used to always thinking about this concept, about if you're placing a trade, where's the stop and where's the potential target. Okay, here we have a morning star, light green. By the way, the arrows here, this is actually, we're in a beta test now of the scanning software, and on the top there, the arrow says morning star. So what I did was I said, okay, find the morning stars in the, I don't know what this is, this might be euro, in the dollar yen. And it highlights it. So you have the green rectangle, may be a little hard to see there, but it just picks out the morning star based on my definition. So the trend was down.